Finding the first property was that individual that hired me to sell the hoverboards for him. He was like, you should get into it. So we stayed connected. And about probably a year or two later, probably 2 years later, I want to say, I had that analysis paralysis that everyone had, not taking action, running all the numbers, not putting in offers, things like that. And I remember I told him I wanted to buy a property, and he's like, listen, I'm willing to part with a property for you to help you get started.
Yo, what is up, everybody? I am Matt Drouin. I'm the host of the GoBigLive Real Estate Investors Podcast, the place to tune into if you're looking to scale from small residential properties and do bigger commercial deals to get closer to your financial goals much quicker. I am psyched out of my mind today to have a very special guest on, Mr. Dante Belmonte. Dante is managing member of the Victory Capital Group. He's also a real estate agent based out of Syracuse, but with a focus of acquiring value-add multifamily in North Carolina and South Carolina. I don't want to get too much into his bio because I want him to tell his own story, but he's done some pretty impressive things, raised millions of dollars worth of capital. Today, we're going to learn about exactly how he did his first big deal, or it was big for him at the time, and some actionable type stuff that you can pull out on your own journey of going bigger on your commercial real estate deals. So Dante, long-winded intro, but thanks for coming on the show.
Yeah, Matt, definitely. Thanks for having me on. Appreciate you inviting me, and excited to get into it today with you.
All right, man. You were born, now you're here. What happened in between?
Not a lot, because I wasn't born too long ago. I'm 26 now, so not too much has gone on, but really graduated high school, didn't have the bug to want to do college, really, essentially, go through that lifestyle. So I actually started working at a dealership, a car dealership locally, and I was very good at sales. I was the number one new car salesman in New York State for Mazda, the manufacturer, pumping out a little bit over 300 cars a year. Slightly before that, I had a job. If you remember those hoverboard things, with the two wheels on the side, one on each side, I sold those at our local mall. And I was really young. There's a meaning to this story. I was 16. I wanted to sell these things, and this guy had a stand, and he had like 14 employees that worked for it. And he's like, no, I'm already maxed out with employees. I was like, listen, I'll work for you for free for a day. And if you still like me, then I want you to give me a job. And so I worked for him for free for an entire day, and he fired all 14 of his salespeople the next day and hired me full time. And I like cranked those things out for him. To this day, that is the guy that got me started in real estate. So that was a gentleman who was buying basically single families all the way up to about 6 units in the same neighborhood, was buying them for 20, 30,000 a building. They're now worth 200, 250,000 a building. So he's taken a local neighborhood in Syracuse, has gentrified it essentially, and brought it into a beautiful area with very high-end rentals in it. And he was just like, hey, you're really good at this whole sales thing. I really think you should get your real estate license. So a few years after that, while I was at the dealership, I was also pursuing getting my real estate license. And once my earnings from real estate brokerage beat my earnings at the dealership, which wasn't very hard to do because salespeople at dealerships don't get paid too well, I switched over to real estate full time, started investing into real estate full time as well, and have not looked back in the past about, I think it's 7 years now.
Now, Dante, I want to dive in a little bit. Mall kiosk sales. I mean, that idea to a lot of people are like, damn, I wouldn't want to walk a day in that person's shoes. And you were pretty young at the time. So how did you get so good on the sales side of things to be able to crush it that early on in your career?
Humbly, I'm a very personable person. I'm really good at talking to people, I like to think, and not just being super salesy, like, hey, but building a relationship, relating to that person, and meeting a need, essentially. It's not about just selling the product. It's about meeting the need of someone, making them comfortable through the process too. For example, working the dealer business, used car dealers, they always say, the scum of the world, essentially. And they're not wrong, but the thing that set me aside, and I had a lot of conflicts with my manager because of this, is I wasn't a super pushy, closey person when it came to selling. It was, I supplied them with the information they needed, hoped they accomplished everything they needed, gave them all their information, gave them my information, put them out the door. And they would be like, well, wait, no, I don't want to go anywhere. Like, I actually want to buy something. And that was set me apart from everyone else. Little things like someone would be out in the lot looking for a car. I'd kind of like, I'd veer away from them, and I'd put my hand forward my business card. I'd be like, guys, take this, and if you see another one of me, just wave this around and my business card, and they'll leave you alone. The other salesperson, I kind of walk away and they'd be like, no, wait, we need your help. Like just coming off different than everyone else. And I've used that approach for every sales position I've ever been in. I worked at Delta Sonic. I led their car wash sales when I worked there, the kiosk, the dealership, and now with real estate. And it's really just setting yourself aside, but not being that person that's trying to make a sale, but make someone comfortable and accomplish their goals.
This is where we have some common history in early career stuff. Actually used to be a lot boy at a car dealership, and during my downtime, I would have conversations with the car salespeople because my dad was always like kind of pushing me towards sales. I was kind of a directionless type of like listless young person, and so I wanted to get to know like what the sales thing was about. And I was like, I asked one of the salespersons like, what's like the key, like what's like the magic behind like how you do so many sales? And he was like, I just wear the people down emotionally, so like when they actually give you like your keys to get like your your trade-in evaluated, they would basically like they'd go out, they'd go to the bathroom, they'd have a cigarette, they'd maybe like go like have a sandwich in the back break room, and then the whole idea was to draw out the process and like wear them down emotionally. And then this was my first taste of like, so this is what you have to do to be good at sales, is to like psychologically manipulate people and stuff like that. So, so I definitely can see why you had some conflict with your manager, but it sounds like you kind of found your own way and have used it to your advantage today to actually do business with people and do business with people that feel good about doing business with you. So let's talk about your first like foray into being a real estate investor, because you started as an agent. Tell me about that transition.
Yeah, it happened pretty simultaneously. I became an agent and bought my first property within a month of each other. So finding the first property was that individual that hired me to sell the hoverboards for him. I was explaining, he was like, you should get into it. So we stayed connected. And about probably a year or two later, probably 2 years later, I want to say, I expressed to him that, hey, I'm ready to buy my first property. And I had that analysis paralysis that everyone had, not taking action, running all the numbers, not putting in offers, things like that. And I remember I told him I wanted to buy a property, and he's like, listen, I'm willing to part with a property for you to help you get started. And I remember driving over there, I was just telling myself, I was like, you're going to do this, you're going to buy this, no matter what happens, you need to buy that because it's going to get you started. And I remember I walked through the first unit, through the front, we went up the back stairwell and through the top unit and back out. And I never saw the basement. I never saw the attic, and I bought it without an inspection. And I was just like, let's just do this thing. I don't suggest anyone ever do this, but it was one of those things where I was like, listen, like, I just need to buy this property because this will get me rolling. This will start that snowball effect. And I'm really glad I did, because that first property got me started into a portfolio of rental properties I have today.
Yeah, it's the DDD principle. It's the do a deal, damn it. A lot of people just like get in their head about, oh, do I do short-term rental? Do I do midterm rental? Do I do long-term rental? Do I buy for cash flow? Do I buy for appreciation? Do I buy it for a property that's in my LLC, or I buy it in my personal name? And maybe I need to get a website. Maybe I need to get business cards. And before like all the stuff you're putting into in terms of this analysis and work, like by the time you're actually ready to make a decision, you've already given up because you're so exhausted and you haven't even taken any substantive action in the process. Let's fast forward a little bit. So you accumulated a portfolio. What was the seminal moment where you were like, maybe how many properties you were up to where you were just like, I don't know, man, I need to do something bigger than this. Tell me about that.
Yeah, so I identified a street that I wanted to buy multiple properties on and kind of do what my mentor, I guess you could say, did, where he just bought all on one street and transformed it. And I had a few properties on one street. And I was like, yeah, this is the street. I've already got a few. I can see the opportunity. I started contacting all the neighbors on that street. And then I just started looking at it. I'm like, this is going to be a lot of work. This is going to take a long time to convince all these sellers, get all these properties, all these units under all these roofs, these different tax bills, different insurance, different utilities. I was like, there's got to be a better way. And that's when I told myself, I want more scale. And to get that higher scale, I have to sell out of these smaller ones, use that equity to get into the bigger ones. And that's really when I started looking at the bigger picture and how I wanted to grow, was when I said, enough's enough of the small stuff. I can't sit here all day. I got to graduate to the bigger stuff, which I did pretty quick, because a lot of people say, I'll build a portfolio of small stuff for 10, 15 years. and then trade up to the bigger stuff. For me, it was 2 or 3 years. It happened pretty quick.
Yeah, it took me 11 years, 76 doors, and 25 properties to do that. And that sucked. And when I achieved my financial independence and replaced my income, then I was like, damn, I have to think about my wife now. And she was, stuck in a high school math classroom. And so my dream of like going to Europe for, going backpacking with Europe through Europe with her for like 2 months at a time wasn't going to be a thing with that being the case. So that was my seminal moment. But yeah, what do you say to people that, I guess like, where do you have to be? Like, where do you have to be in order for the universe to give you permission to get into bigger scale for your real estate deals?
You got to get annoyed a little bit, which I'm sure a lot of those people with the smaller stuff do, but you just have to be in a position where I always tell people finding the bigger stuff that makes sense can be more difficult. And when you have your equity tied up in a lot of small deals, it's tough to time it where all those small deals go into the big one. So I always say if you build up enough of a portfolio, you feel like you have enough equity, instead of 1031ing into all those small deals into a big one, it's really hard to line all that up and make the stars align. Sell the small stuff, take the gains, pay the gains, have it ready for the big stuff is really the suggestion I give people to for that. The 1031 is not designed to go from $150,000 duplex to a $800,000, 12 unit or something like that. It's really designed for $1 million deals and $1 million gains to be brought into $1 million deals.
Now, did you not do a 1031 exchange on those properties that you owned? You just basically cashed them out?
Correct. Yep. Cashed them out, paid the taxes. 2, 3 years of ownership, there wasn't a huge amount of gain by any means. I wasn't buying massive value add properties. There was a few that I had some serious gains on, but there was other ones where, after commission closing costs, there was just a few bucks left over, and it just wouldn't have made sense to.
Yeah, that's the one thing is I just parted ways with 17 units. There was 4 properties that I bought like early on in my career just recently, and people thought that I was insane for not doing a 1031 exchange. And the reason why I sold those properties was because, one, the return on equity was absolutely abysmally horrible. And then 2, there was a huge wake-up call for me when we bought a property last year. It was like a mid-sized deal. It was a $2.75 million mid-rise office building. And we had to bring on a partner because myself and my partner didn't have the liquidity that the bank wanted to see when we filled out our PFS. So that was really a huge wake-up call for me, and that like we need to build our own cash, the cash, balance sheet, so we can keep more of the equity of the properties, or if not all of it. And the thing is like, yeah, I'm probably going to get killed in taxes, but I think that at some point in time in the future, when you keep kicking that can down the road during the 1031 game, you're going to get killed big time if you ever exit and don't do a 1031. So you almost have to like do like a bank on, swapping until you drop.
It's a balancing act, and as real estate investors, we're cash poor a lot of times. We don't have cash in the bank always because it's either equity in a property or it's been invested in improvements or capex. So it's a balancing act, and I don't think you're crazy at all for not 1031ing out of those properties. It makes sense.
Absolutely. So let's talk about your first big deal. We want to dissect as part of the show. Tell me about the origin of it, how you found it, what you were doing. How you pulled it off. Like if you had all the cash on your own, or if you raised capital. Tell me that whole story.
Yeah, so we actually just exited that deal about 2 weeks ago, and I'll get into all that. So it was a 24 unit called Allison Heights in Concord, North Carolina. It's one of the cities or suburbs outside of Charlotte, North Carolina. And I was identifying properties in that market. I identified Charlotte as a market I wanted to invest in, and properties outside of it. So I started building relationships with brokers, things of that nature. And this one younger broker, younger guy like myself, younger brokers, we always relate. We're kind of, we work up together. And those are the guys I want to build relationships with because they're going to be heading up the brokerage department in years when I'm there as well. So this one younger guy said, "Hey, I've got this one deal. I'm going to bring it to market in a few weeks. I'm happy to give you a look at it first." It wasn't like a totally off-market deal. It was kind of like semi, the word off-market is used very loosely today. And they wanted 2.4 million for 24 units. It's 100,000 a door, built in 1986. All 2-bed, 1 baths, 868 square feet each. Great property. And I just said, hey, I underwrote the numbers. 2.4 definitely made sense to me at the time. And he said, if you want it, you got to sweeten the deal a little bit to preempt it is what we call it, or take it from before it goes to market. So I put in an offer for 2.5 million with my partner at the time, and they accepted it. And it was kind of like that groundbreaking moment. Our first LOI got accepted on an acquisition. So for a deal like that, 24 units, I syndicated that deal with my partner. We raised 1.14 million in capital for that deal. And that was broken down into down payment, closing cost, fees, working capital, and CapEx dollars. And bought that deal. It needed a lot of help on the interior. I'm going to make this, short and sweet. I won't dive super crazy into it, but basically, this property was 95% occupied when we bought it. We brought it down to almost 50% occupied while we owned it because we decided to rip off the Band-Aid, renovated all those units, leased it up, brought rents at an average when we purchased the property of $735 per month. When we sold the property, they were at an average of $1,120 per month, and we sold at a 34% gain. So we bought at 2.5, we sold at 3.35 in 2.5 years. So loan type we took on that, it was a Freddie Mac SBL loan, small balance loan, and we had a fixed rate for 3.49%. So when we sold that deal, we sold it on an assumption. So someone assumed the remaining balance of our debt, which was 5 years, and that's what made the value so attractive to this individual here. And I can get into any of the details on that deal, but that's kind of the quick and dirty we made on that one.
I do want to back up for a second, but I want to go on this assumption thing because we have not talked about it a lot on the show in the past year and a half we've been doing this.
Huge piece of the puzzle.
So one of the things when I'm looking at assumption, I'm like, damn, their asking price is $3 million and the loan that can be assumed is $1 million. Like, where do I go from here? Did the buyer end up getting like a supplemental loan? Is that even a thing to add onto the debt stack? Tell me about that.
Yeah, so you made a good point with the supplemental, which I'll get into in a second. But that's the one downfall of the assumption is meeting the difference because they obviously bought it for less. You're going to buy it for more. There's a bigger gain. So this guy brought 56% down to the deal to meet the principal. He did that in the form of a 1031 exchange. So he had the capital. So this was a perfect storm because it was two very big pieces of the puzzle to get deals done today. A 1031 exchange and an assumption. What you mentioned for the listeners, a supplemental. Supplementals are not available on Freddie SBLs. They're available on Fannie SBLs. And that's small balance loans. I believe that's below $7 million in principal value. And then Freddie and Fannie will do supplementals on regular agency loans. So what you just described is, hey, you owe 1.8 million at 3.4%. Today you can get access to that equity if the property meets the debt service coverage. We'll give you $1 million more of that, so you'll have 2.8 million in equity. In principal. At a rate of 7.5%. So that's a blended rate of roughly 5.25%. So your principal on the first lien, I guess you could say, or the senior debt is 3.4. Then that supplemental or that second lien with the senior lender is going to be that today's rate of 7.5, and that's how they blend those rates together. So getting access to that equity is great, but the issue with that is there's no guarantee until you go apply for that supplemental, have the appraisals, go through the underwriting. So that's the only downfall of the assumption piece, but you get access to an interest rate that we'll probably never see again in our life.
Yeah. So what you're saying, if I hear you correctly, is that this person, after they close in the property, that they can actually get a supplemental after it and then pull some cash out, or what?
This one they won't be able to because it's a Freddie SBL. So Freddie SBLs don't allow supplementals. If it was a Fannie Mae SBL, they would. So this individual is just 1031ing out of a property, placing the capital, and he's going to cash flow it because this deal does cash flow pretty strong. And for someone like him that isn't syndicating, doesn't have any fees, and already has a pretty low principal balance, he's just going to probably take the 5 to 7, maybe 8% coupon clipper of cash flow each year. For us, this deal did 8%, 11% in year 1 and 2. So it cash flowed pretty strong for us in an appreciating market and for our investors.
All right, so 3 things I want to rewind the clock on here. Typically, I mean, deal flow is a bottleneck. Capital or access to capital is a bottleneck. And then one thing we really haven't dived into a lot is knowledge, or not knowledge, but I would say like just kind of like mechanical know-how to it. Most of the guests in our podcast that have told the story of their first bigger deal, kind of like cowboyed it, to be honest with you. And it sounds like you kind of knew what you were doing. So how did you get brought up to speed on terms of like how this whole works? Because the first time I heard the word syndication, it made my head hurt, and still makes my head hurt. I've never done a syndication to this day, but yeah, tell me about that.
Yeah, so funny you say that because the first time I heard syndication, I thought it was a bunch of mumbo jumbo and I wanted nothing to do with it. That was when I started my podcast, probably either 5 years ago now, I want to say. And that's really how I gained a lot of my knowledge. I was like, how can I talk to really big investors without having to pay some stupid consulting fee or some mastermind fee? How can they get value out of something? How can someone else get value out of it? And that was obviously the podcast play. So I had just had on a lot of big investors. I read all those books you see behind me here. Public service announcement. These books don't mean anything. You can't learn anything from these books unless you apply and put action to these books and the words in them. So I want to put that out there as well. And then the other piece is my other part of my real estate, the brokerage side. I've sold over 400 multifamily properties in my career. I got to watch guys do it in real time over the life of me, investing in real estate on the small side, but also brokering it as well. So just all those things kind of played into one another. And that's how I became very well versed. I understand the vocabulary. I understand how to do it. I execute on it. And to answer your question, essentially, but did I cowboy it? Hell yeah, I did. There was I didn't know everything, and I can't know everything until I've done something. So for the first time you do something, you're learning it along the way. And being pretty conservative too helps with that because it leaves room for error.
That's an awesome answer. Capital, right? So how did you position yourself this was a pretty big raise for a first one. I mean, most people are doing like maybe a $200,000 to $500,000 raise. This was a $1 million plus raise for this deal. Like, what was your methodology in terms of getting that cash? Because I probably thinking it didn't come from the few triplexes you sold.
No, definitely did it. Did not. So no college debt, no debt at all early on really helped me in a position to stack cash and stack it quick. That helped. But that only goes so far, especially when you're talking multi-million-dollar deals. To give you a snapshot of how my capital raising career has gone, it went from this deal raising about 1.2 million in about 2 to 3 weeks to on our last deal raising the full amount in a matter of 2 to 3 days and having to wire back people that I didn't even know that wired me 50, 200, 300 grand that wanted in on our deals. So it has progressed over time. It hasn't been just an overnight success by any means. That's why I say that. So that first deal was along when I started the podcast, I was also hosting meetups, and I've had hundreds of investors come through those meetups in the last 5 years. And I've used those to educate, they say, the triangle, know, like, and trust, those three things together. I have done all those three things with a lot of individuals who do trust me. Individuals that have bought a triplex with me as their real estate agent and have invested $100,000 and then bought a quadplex and invested another $100,000. Those are the relationships I've had with investors. So it all kind of comes full circle for me. So that first raise, I don't want to say it was difficult. It was super nerve-wracking because I was like, I had a $50,000 deposit, non-refundable, which I forgot to mention when I bought this deal, non-refundable. So that means if I walked away during the due diligence period, I lose out on that money. And then I said, hey, I need to raise with my partner, of course, $1.2 million or I don't get my deposit and I lose the deal as well. I don't get my deposit back. So it was just a lot of avenues of building relationships, educating people, letting them know what I'm doing in real time. Hey, this is my first deal, but here's my training. Here's the people I've worked with. Here's someone that is, quote unquote, mentoring me, all those things. And, my mentor, he always bought his own stuff. Now he's trying to buy bigger stuff and he's asking me questions about it, which is funny. And I love that we help each other out. But now to today, I've built it up where I could confidently raise, 10 million plus dollars for an acquisition for us.
What was your methodology in terms of order of operations as to how you did this, like specifically?
Yeah, so it's kind of like chicken or the egg, which one kind of came first. People always say, do you raise the money before the deal, or do you get the deal before you raise the money? Is the question. I, for me, it's kind of raise the money first. Hey, if I had a deal that looked like this, if the returns looked like this, is this something you would be interested in? And a lot of people said yes. So when that deal came about, we put it in front of them, and they were still on board, and that's how we raised the capital from that.
So was this like a email kind of like blast out? You got this thing, maybe your LOI accepted. You sent an email out saying, or even made phone calls. What type of did you have a pitch deck already presented, or was it kind of like a short email, a couple paragraphs? This is it at a high level. Not sure if we're going to go forward on this deal. Tell me about kind of like the sequencing of the communications to these people that you may have had these pass along conversations with at your meetup, along showing at properties, various lunches or dinners or coffees, that sort of thing. And you maybe pop that question of like, if I had an opportunity that we really liked a lot, would you be interested in hearing more about it? Like, tell me, take it from there.
Yeah, so I went the super formal route. The way I did the first raise was how I wanted to model doing every raise, therefore. So really, it was building up an investor email list. It started with a humble 100 investors. Now it has 3,300 investors on it. And what I did with that list was those were relationships that I curated, coffees, showing of properties, selling of properties. I'm going to put your email on this list. When we have a property available and we're ready to raise, that's where you'll know. So LOI signed, PSA executed, due diligence complete, because we didn't want to start raising capital until we knew we were going to move forward on the property. So did our physical inspections, did our financial inspections. Once that's complete, we have the pitch deck made ready. We announced the deals under contract, and we're going to start raising capital on X day. X day is the day of that webinar that we'll do to pitch all the investors. And that's when we'll send out the invite. Everyone that's interested signs up for that webinar. During that webinar is when we release the first pitch deck, tell all the details about the deal, answer all the questions. And then at the end of that presentation, that webinar, is when we open up our portal for funding. And that's when people can start to fund the deal and place money into the deal. So I wanted to do it, most people probably are going to individual meetings, meeting with individual investors, saying, hey, this is what it looks like, answering questions. For me, it was, again, I wanted to set the model and get people comfortable with exactly how I was going to do it every time. So when they went to go reinvest in our next deal, which we had a lot of repeat investors, they knew exactly the model of how to move forward. So the next deal came about. We got an LOI. We did the due diligence. Once we did the due diligence and everything looked good, we sent out the email blast, hosted the webinar, started raising capital right after. And we kept doing that after each deal.
What is the methodology behind now, knowing what you know now, in terms of having an ever increasing, widening top of funnel in terms of people that are on your distribution list?
Like getting people to the list, how am I doing that? Is that what you're asking? Yeah, so repeat investors is one that they're already in there. Referrals from those investors. So those are people that are saying, hey, I'm in this awesome investment opportunity. It's a private investment. These guys are doing a really good job. Their friend wants in on it. And word of mouth is definitely the biggest piece, but also different avenues of capturing investors, such as I have a Twitter page. That Twitter page is anonymous, but I have 60,000 real estate followers on that. It's anonymous in the standpoint that people don't know who runs it until they contact me. It's called Multifamily Madness. I'll share it. That's not a big deal. It's got 60,000 multifamily followers on there. And I've been tweeting on that for, I want to say 3 years now, about my everyday experience. Whatever experience during the day, I go out and tweet about it. Whenever I'm doing something, I tweet about it. Anything I'm doing at a property, renovation, eviction, whatever it is. And people really like being able to see what I'm seeing through the lens of that account. And they'd message me and say, hey, are you taking on investors for investments like that? Hey, I'd like to get in a deal like that, and bring those in to funnel them in. The podcast has been a big portion of that, which I'm sure you can relate to. And then really just being in the business. I cold call a lot. I send out a lot of direct mailers, not for the investment side, but for the brokerage side. And those relationships turn into an investor. A great example is I cold called a gentleman probably 2 years ago. He was getting older. He had an entire portfolio he wanted to sell. We met, we hit it off. I've sold his entire portfolio. All that cash that he's liquidated, he has came and put into our investments. Another gentleman, I hosted a meetup. He came, he was retiring, again, hit it off. I sold his entire portfolio. He's invested all that liquid cash into our deals because it's something where it's 100% passive. It is truly passive, as in he wires the money, he does nothing, and it just keeps coming, and he gets his updates from us. So there's so many different avenues. A lot of people will go to friends and family, of course, maybe some coworkers. But for me, just the brokerage side of the business meets the investment side. They go very well together.
So I'll stop beating this horse to death because this is just absolute gold. But if you were to boil all this experience as a successful capital raiser down to its essence, what would be your advice in terms of what somebody else can do to replicate their own success?
It's tough. I'll tell you, it's a tough question to answer because I've hit a very unique niche, I believe. I'd say the biggest one was probably hosting and starting the meetups that I do. And I've been doing them for 5 years. And they started with 5 people in a cubicle, and they've graduated to 120 people in, an event space. So it's very hard. John Smith can't just wake up one day and say, "Hey, I'm going to start a real estate meetup with no credentials and start having people come there." It was something that I did. I started early on, and I nurtured those relationships and built that up to a fairly large size event that I host and I take a lot of pride in. So that's the one thing for me. The one thing that someone can replicate, because I don't think they can replicate something like that, is really just starting with friends and family, explain to them what you're going to do and execute on it, actually do it successfully so they can go out and refer people to you. Hey, I'm part of this awesome investment. It's giving me these returns. Here's, the guy that's doing it. You should talk to him. So I know that's not the best answer, probably not the answer you're looking for, but that's the answer I've got for you right now.
It's the best answer because everybody's looking for what is the last thing I need to crack the code? What is the secrets? What is the secret sauce? What's the magic spell? And I think that everybody's methodology is different, but the key to all of it is just to actually do it. And I've kind of used my personality of being, I'm not a detail oriented person, so I have a partner who's detail oriented. I'm kind of like the Tasmanian devil that just kind of I'm just gonna commit to a lot of things. I'm gonna successfully execute on those things that I commit to, but I'm not gonna be the person that's gonna be I'll listen to, podcasts definitely help me, but I think that a lot of people, just get into this thing where they're telling me, Dante's telling me everything I already know. What is really behind the curtain? What is he hiding from me? You know what I mean?
Oh yeah. Yeah. It's tough. And I wish there was that perfect pinpoint answer, but it's different for every person in every situation. I know guys who have never even done a single real estate deal in their life, have never done any research on how to do one, but they had a family member that said they would back them, and they started that way. And they're very fortunate. I know other guys that are great operators, do a great job, and they've never raised any capital. They've done it all in-house, and that's been their success. And then I know guys in the middle. So it's just, everyone's got different situations. Everyone has different circumstances, and there's no right or wrong way to do it. It's just however works for you.
Second to last question on this deal, the deal flow part. From what you said, it's oh yeah, I just talked to some brokers, and then I submitted an LOI on this deal that was, kind of preempted this deal and that sort of thing. And then, bada bing, bada boom, I got a deal under contract. I doubt, maybe you're that lucky, but I doubt that that's what happened. So how many, were you cruising Crexy and LoopNet for these markets, and then just, calling and chatting up with brokers? How many properties did you analyze? How many LOIs did you submit until you landed this deal?
I'll never forget this number because I tracked it. I underwrote 102 properties to get the one. It was literally the 1% rule, call it. I don't know how many LOIs I submitted, but I know how many I underwrote. And what I was doing was I was flying down to Charlotte. I was meeting with these brokers face to face saying, Matt, my name's Dante. I'm here. I want to buy these types of properties. I knew what I wanted to buy. That was the biggest thing. I knew my buy box. I knew the unit size. I knew the vintage. I knew the location. I knew what type of rentals. All that. I had it in there, the price point, the unit count. I had all that. I made time to come from New York to Charlotte, sit down with these brokers, meet them face to face. Matt, this is what I'm looking to buy. I'm ready to buy. Let me know when you have it. Versus the guy that calls up and says, hey, you have any good off market deals I can look at? Who the hell are you? It is really that conversation. It's building those relationships. It's getting in front of these people, making sure that you're real, showing that you're taking time out of your day, out of your week to come down and meet with these people. And it was looking at deal after deal after deal. I hadn't done a large deal at that point, so I didn't know what the perfect large deal looked like, but I watched enough people do it. I learned from enough people that I was able to underwrite it, submit LOIs, knew this one wouldn't work, lost out on it. Looked at this one, didn't even bother submitting an LOI on it. Submitted an LOI on this one, didn't get it. Got beat out on this one. Kept doing that after looking at 102 deals, found one that worked and got aggressive with it. Like I said, that non-refundable deposit, that was a big piece of the puzzle. They wanted certainty, and throughout the contract period, I put up another 50,000, 25 and 25 to make it a total of 100,000 non-refundable deposit when I was 23 years old. That was a little scary. It was a little scary, let me tell you. But that was how that deal had to go. So no, I didn't get lucky. I wasn't cruising LoopNet and Crexy as much. Deals do happen there, but obviously not as many. But it was finding out who are these brokers, going to the public records, finding out where deals traded, who was representing who on those deals, and reaching out to those guys. I've got a list. I could pull it up right now just to tell you. I have a list of all the brokers in North and South Carolina, and I talk to them on a regular basis. I've got 98 brokers on that list. Those are guys that, not every broker, but those are guys that are in the markets I want to be in, selling the deals that I want to have. These aren't, regular real estate agents. These are brokers specializing in these specific deals. And I call them, I talk to them. This morning, one of them called and talked to me. These guys call me now as well, and they do send opportunities. And I have bought some true off-market deals from these guys because of those relationships I've built. And, when 22-year-old Dante calls Cushman and Wakefield or JLL and says, hey, I want to talk to the senior director, that doesn't happen like that. I talk to the junior broker who's been doing it for 5 months. Hey, I'm young like you. Let's help each other out. You want to sell more deals for your brokerage? I'm happy to buy those deals. Let's talk. Hey, Ryan, so-and-so, what does, your lead broker have coming down the pipeline? Anything you can share with me? And just building those relationships. So as those young guys move up in the realm, I'm kind of moving up with them as we're doing deals together.
Love it. Now, let's talk a little bit about the financing piece of this. And this will be my last question before we start, before we get into the high level advice type of stuff. So you got Freddie Mac debt on this deal. Were you and your partner strong enough to be the partial guarantors on this debt, or did you have to bring in somebody to be a guarantor on the debt?
So we met all of the pieces besides the KP or the key principal piece, and that was the experience piece. I owned multifamily, but it wasn't large multifamily that Freddie and Fannie agency lenders want to see. So again, building those relationships, just like I did with brokers, I was doing it with GPs too for potential partnerships. And at that point, I built a relationship with so many general partners that were syndicating. I actually got the pick of who I wanted to sign on my deal. And I had a few guys to choose from. And there was one guy I felt pretty confident in that was just going to literally sign on the loan for us. Wasn't going to do anything else, but if I needed his help, I could just call him or text him at any time and he would help me out. And we had that individual just sign on the debt for us. I doesn't ask any questions. When we sold the deal, we just said, hey, we got a signature page for you to sign. And he just signed it and overnighted it back. Like, that's how confident he was in us, because he saw us executing on this deal. He took a chance on us for sure, but after he saw how well it was performing and how well it was even performing over some of his deals that he's doing, it's just the occasional check-in or, hey, I see you guys are sending these updates out, everything looks great. So to answer your question, no, we didn't meet the Freddie Fannie guidelines because we didn't have that experience piece. I believe, again, this is 3 years ago. I think we had the net worth and liquidity to meet it. But today, now we don't need a KP. We meet all and check all the boxes, which is great and very helpful to us because we don't have to give away a slice of the GP pie.
So did you give away a slice of it in consideration for that signature?
Yep, we gave away 20%. So that was 20% of the management entity which owned that LLC. And so you got 20% of the acquisition, 20% of the disposition, 20% the split from proceeds, all that good stuff. But I'll give up that 20% every day to do that deal because without that, I couldn't have done the deal.
Yeah, no, that's an expensive signature, and in a position that I'd like to be in someday because I don't know. I mean, this is a tough business. Finding deals, kissing a lot of frogs, raising the capital, putting all the pieces together, and that sort of thing. And I'd love to be in a position when I am like, I'm 40 years old right now, but maybe when I'm like, 50, 55, where I'm the guy that's in that position. That is complete like baller status right
Well,
there.
it is. It's great. You sign, but what I will say to that and to people today trying to get KPs, it's very difficult to get KPs because of the state of the market and foreclosures or loan defaults, things like that have been going on where, I was seeing these guys on LinkedIn just signing on deals all day and just kind of bragging, oh, I just signed on these guys' deal. I got a check and I'm going to get another check in 5 years when the deal sells, blah, blah, blah. Well, I know for a fact that 3 of those deals that guy signed on were foreclosed on. So it sounded easy in the beginning for that guy, and he was bragging about all these things. I'm not saying you can't do it, Matt, because I'm sure you can, and if you find good operators, but they were just kind of bragging about it and didn't do their due diligence on the property, the individual, and it bit them in the butt. And some of those guys can never sign on loans again because their loans, they've been blacklisted from the loans that they signed on that went bad.
Yeah, absolutely. No, that's a good point. So let's say you're talking to a experienced real estate investor that wants to start positioning themselves to swim upstream, do bigger deals, or do their first big deal. What would be your words of advice to them in terms of how to get started today, what to do today, this week, this month to get themselves positioned towards that?
Yeah, to me, it's never been a tougher time to do large deals because of the swing in the market that we've had in the last 3 years. When I get people that reach out to me and say, hey, I want to start buying real estate or I want to start doing bigger deals, what do I have to do that? I tell them to stop, hold on, don't do any big deals. Learn first from someone that has done big deals for a long time, not someone that's been doing it for the last 2-3 years, even myself, because I haven't been through my market cycle as intense that has had changes because your first deal, if you lose out, you're done and you're done for good. If it's your 30th deal and you lose out on that one, you've got so much cushion behind you, you can probably recover from it. So I tell people to tread very lightly for those large deals. Find someone that has been doing it for a long time and bring value to them in some form. Don't just say, hey, can I go get coffee with you to pick your brain? Can we go get lunch so I can pick your brain? Can I hop on a 10-minute phone call with you? Somehow find them something that will help them and offer it to them. Hey, I know someone that's looking to sell this property. Can I introduce you to them? Or, hey, I know a really good contractor that does really good work that's looking for work at a fair price. Can I get you linked up with them? Bring some piece of value to that individual. I get people that reach out all the time just saying, hey, can we hop on a call? Things like that. And I used to do it all the time, but now it's just, I physically don't have the time to help each person out. Not that I'm saying I always need something in return, but I have to prioritize my time. So again, I wish I could give you a better answer, that there is some, perfect answer that'll get someone to deal, but position yourself with someone that knows what they're doing and be smart about saving up that capital to put it in order to be worked. Put it in a position where it can be put to work. So, if it's sacrificing doing a 10-unit deal to go do a 20-unit deal, do that. Don't take it. If you feel like the 10-unit deal is a good deal and you see how you can immediately make a gain on it, then do it, make the gain, and get ready for the next one.
Mm-hmm. Excellent, Dante. That's money advice. Well, thank you so much. You've been generous with your time. How can our listeners get in touch with you and learn more about you at Victory Capital?
Yeah, so you can visit our website at victorycapgroup.com. That's victorycapgroup.com. My contact information's on there. And then on the brokerage side of things, if you're ever looking to get in contact with me, it's Dante.Belmonte at huntrealestate.com. So it's Dante.Belmonte at huntrealestate.com. I'm the type of guy who hates having that little red circle next to my mail app that says the number of unread emails. So I try to get to all of them. And that's just me. That's how I am.
Yeah, you and I are
So
very
I will
different.
reply.
Yeah, it's like, oh my God, you have 100,000 unread emails? Yes, I do.
30 right now, and that's probably all from just being on this call. So I'll get that down in the next hour or two.
All right, excellent. Dante, thanks again, man, for being on the show, and we'll catch you sometime in the Cuse when I get over there.
Awesome. Thanks, Matt. Appreciate you reaching out.